Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 9th of January. Starting off with the FTSE 100, which is, despite the economic background and backdrop with the Treasury having to intervene in the markets, actually broken to the upside, broken through that December resistance line, 82.50. Above that, looking for obviously the 8400 level, which has been basically post-May resistance for this market. Best case would be that somehow the market gets really cheered up and heads to the top of that rising trend channel from late 2023 as high as 86.60, maybe by the end of next month. But at the moment, that does look a bit like wishful thinking, even though the rally got off to a good start with a bounce off the 50 and 200-day lines and also the RSI 50 bounce, one of the best leading indicators you can have in these kind of situations. If we do break down, then the initial support obviously 82.50, then below that 8200, not expecting anything worse than that now, given that RSI 50 rebound. Moving on to the DAX, where one would assume that if the FTSE is doing well, the DAX is doing well too. In fact, today the FTSE is doing rather better. We're holding above, or the top of that first gap down that we had last month, so 20,200. Above that, still looking for a retest of record levels through 20,500 and up to as high as 21,000 by the end of next month. Obviously, that could be rather sooner. But we need to get through that 20,500 zone. On the downside, not expecting anything worse now than the old October resistance and the 50-day line near 19,700. Moving on to the Dow, which had and has continued to have a bit of a rug pull since the beginning of last month, but we're holding on to the floor of that rising trend channel there. Nominally, the uptrend line there from August, the whole channel there from April, but the level around 42,300. Worst case at the moment, we're looking for November support to be tested again at 41,700. Hopefully, we will get away with that given the way the other markets are moving better. RSI rising, the 50-day moving average rising at 43,400. So that is also a sign that perhaps with both the 50 and 200-day lines rising, that will guide the market higher. Moving on to Bitcoin, which had a bit of a rug pull, the turn of the week, and still going with that rug pull. We've got that uptrend line there from back in November, the red one there at 92,000. That was the suggested support area, and that's come in now. Below that, we've got the old support on the way up, 85,000, which would be rather nasty, but this can be a nasty market. If you are a fan of this market, you'll be going for the entry level now at 92,000. If you're very cautious, you'd wait for 85,000 or an end of day close above the 50-day line there at 97,000. So take your pick. Moving on to gold, and here we've managed to break back above the 50-day line, not by much. It's around 26.70. Above that, we're looking for 27.50 really, and hopefully we could get that by the end of next month or even sooner than that. Worst case at the moment is we've got to test 26.15 and the floor of that rising trend channel from February. Moving on to pound dollar, where I covered it yesterday after a long time, and it's obviously been in the news. This market, falling like a stone, but not doing very well. We've broken that uptrend line, the red uptrend line there from back in October 23, and that was around 120, the 126 level. Current situation is that below the initial January support, around 123.60, there's the risk of an ongoing decline towards the $1.18 level, maybe by the end of next month. It is a bit strange given the way that I suppose interest rates may not be falling as quickly as the market is expecting, but if you look at the RSI there, you can see we've had multiple failures at the neutral, at and just above the neutral 50 level since the beginning of last month. So that's very, very bearish indeed, as is by definition the dead cross there between the 50 and 200-day lines that we had in the middle of last month. But these peaks below RSI 50 tend to be very bearish indeed. And as you can see, we've broken back below the April support there, 123.10 as well. So not looking good in any way for pound dollar at the moment. Moving on to the stocks, and happier situation at Blencowe, where Looks like there's some operational progress in line for the company. The other point to note is that we've had a bear trap island reversal, actually gapping down in November and gapping up now, and gapping up through the 50-day moving average. So it looks as though hopefully the dark days of the price action are finally over, and we could head up towards the 5.4 pence level maybe as soon as the end of this month. That was the top of the recent range for the shares. Upside value while we hold above the floor of that falling channel there at 3.5 pence. Onto a stock which has been through the mill over the last couple of years. Looks as though it's trying to emerge from that. The update today rather better maybe than even the cynics might believe. Current situation on the charting front is that we've had basically 4 bounces towards the 20 pence level since September. The latest bounce, hopefully the last one. We've got the RSI back above neutral 50. Probably all that's missing now is an end of day close through the 50-day line, just above where we are at the moment, around 25.8 pence. And then that could take us up to the top of the range, up to the upper 30s, maybe by the end of next month. But early days yet, probably not a good time to be complacent, but we have had, as well as the fourth bounce towards 20p, gap close buy signal above 23 pence. That gives us the gap close buy signal, so some people may be cheered by that. Moving on to Capex, where I wasn't going to cover it again, but just noticed a little detail here, which is that both the 50 and 200-day lines are rising. The 50-day line rising, not a surprise, but the 200-day line actually tipping up there at 0.17. That suggests that we're going to a golden cross, and maybe that means that by the end of next month we get up to 0.27 pence. Ideally, we stay above the 50-day line there at 0.14. Whatever happens, there's also an uptrend line in the RSI window, which helps the cause too. Moving on to a requested stock, which is called Capricorn Energy, and here you can see that it's blown the lights out in terms of the price channel that we originally had there, shown in black. So the target there was £2.70. While we were above the £2.20 zone. The next target was the upper parallel of that rising trend channel, which has also just been hit at £3, or just towards £3.18. Current view is that while we're above the latest gap there at £2.98, we could still make further progress to the upside. And as you can see, the next level up there on the chart is up to £3.40, and maybe we'll hit that by the end of this month as a best case scenario target, but we really need to hold above that £2.98 gap on an end of day close basis. But charting success there, if only on the basis of that rising trend channel base that we had from last January. On to E-Star, which seems to be trying to base as well at the moment. Here you can see potential for a rising trend channel base. We had the gap higher back at the beginning of last month. Gap fill rebound was the result at the end of December, and now we're pushing through a rising 50-day line. Rising 50-day lines near the lows tend to be a turnaround signal. Best case here up to 1.9 pence, maybe by the end of next month, if we can stay above the floor of the channel there at 1.1 pence. Nice to see fusion antibodies trying to bounce again. We had basically had the shares bounce off the old resistance there at 8 pence. Above that, looking obviously for a retest of 11 pence recent highs. Best case would be up to 15 pence by the end of next month, which is a 2023 resistance line projection. But the upside value while we stay above 8 pence on Fab. Onto a stock which I haven't looked at for ages, which is HydrogenOne, and here you can see the potential here for a broadening triangle base. We've had a double gap fill there for the shares, and an end of day close above the December resistance there at 24 pence, 24 and 3/4 pence. Could be the start of a move up to 36 pence by the end of next month, but it's a bear trap reversal from below the December support, and we've also had an uptrend line in the RSI window there as well, so that bullish divergence should help the situation. On to ImmuPharma, which today produced a rather large rabbit out of the hat. What's also nice is the way that the shares have gapped up today, so it's an uphill gap off the lows through a rising 50-day line. The nice thing here would be if we can hold above the 200-day moving average at 1.8 pence. If we can do that, obviously, we've got the old resistance there at 2.8 pence as a best case scenario target by the end of this month. But the key here really is the way that we bear trapped up from below the August support there, 1.25, and gap through the 50-day moving average. Moving along to Makanga, which I've looked at quite a lot recently, and it's nice to see that the shares are consolidating above our second target there at 10.5 pence above that, looking for 14 pence by the end of this month, and that would take out 1 year resistance quite easily. Ideally, we stay on the right side of 10 pence, whatever happens. Onto a stock which I haven't heard of before, or I think I haven't heard of before, maybe it's changed its name, New Frontier Minerals. Here we've got, on a longer time frame, here we've got from the end of 2023 a rising trend channel base heading for 1.4 pence, and we're looking for that by the end of next month, while we remain above the 50-day moving average at 0.6 pence, so above 0.6, looking for 1.4, quite ambitious, but there has been a nice turn there, and there are unfilled gaps on both sides, but mostly to the upside. Pensana is next, and here you can see that we've got the recovery in place, and that is on the basis of the rising trend channel from June. Top of the channel there heading to 36 pence. We've got a rising 50-day line, and we fill that gap down from last month at 26 pence. So above the 26 pence area, looking for 36 by the end of next month, or even sooner than that. On to a stock which I covered, I think, just a couple of days ago. I was looking for a converging triangle breakout through 0.18, and we've got that. Looking now for 0.3 pence by the end of this month, on the basis that after that consolidation, since the beginning of December, we should start moving well. And also there have been multiple bounces off RSI 50 for the shares. So above 0.8, hopefully decent upside there on Rockhopper. Also in the rock mode that was Rockfire. Now on to Rockhopper, and here you can see that we've hit our second target there at 34 pence. Above that, looking for the shares quite logically to hit the next level up, which is towards the 45 pence level. Ideally, that could be done by the end of next month, while we're above 30 pence, which is recent resistance, or the latest resistance for the shares. Finishing off with the last two. First one is Zanaga, which is continuing its consolidation at the best levels. We're about a week or so away from a golden cross, and above the resistance on the way down there at 9 pence, still looking for up to 13 pence by the end of this month. Finishing off with Zenith, and here we've got decent consolidation at the higher levels. We've already had the gap higher, and basically have found support halfway down the big up day that we had on Christmas Eve. So above 4.5 pence, looking not only for the shares to hit 6 pence, but actually best case scenario target by the end of next month, possibly up to 9.5 pence. But the key here, holding that 4 to 4.5 pence area over the near term. That's it from me today. More updates tomorrow.